As Nigel said, enough about Sun TV. Let's move on. 773 on the price there. Markets holding with a 50-point pop. Dhiraj Agarwal of Ambit Investment Managers is with us. Dhiraj, good morning. Good to have you with us here. Thank you for your time. We've been getting a lot of commentary and views and opinion about what happens next, because it's all about policy. There is, the continuity as far as top cabinet berths are concerned and who's running each of these ministries. And now, will there be continuity in policy, or will we see newer things? Housing is one that we highlighted. Our colleague from Delhi, Sapna, highlighted what is likely to happen there. So it's a big push on housing. What else, Dhiraj, are you guys sort of working on? And because it's all about finding ideas, and a lot of it has got to do with where the government will push. What's your sense?
So I think by and large, the policy continuity will be there. And the message which the government has given by maintaining a stable cabinet as compared to the last time for all the key portfolios is very, very clear that by and large, this whole thrust on growth through capital expenditure and infrastructure development is going to continue. Now, there could be some tweaks on rural programs or consumption boost, etc., which many actually felt even in the last budget that it was conspicuous by missing. And that's the segment of the economy which is seeing a little bit of a stress. So that's possible it can come back. I don't think it will be large. I don't think it will be of the scale that one would actually say that the policy direction has been turned on its head. But there could be a little bit, I would say a little bit of needle swing in that direction, if at all.
All right. So if there is a little bit of a needle swing in that direction, would you now start to look at consumer staples, two-wheelers? I remember you weren't a big fan of two-wheelers about a month ago.
Not really. I mean, I was a fan of two-wheelers a few months ago, and a month ago I said valuations look a little fairly priced kind of a thing right now. But I think rural-based companies should be focused on at this point of time. So I don't think one can yet make a conclusive call that they have turned. One cannot make a conclusive call across the board, but selectively, yes, rural-based. In any case, cyclically, the rural demand has been down for quite some time. So even cyclically, there's time for a rebound. The stocks, many of the rural-based stocks have not done that well, with the exception of course, tractor companies, which are at record highs at this point of time. And yes, one should focus on that.
And rural would be what, according to you? Would it be consumer staples? You've spoken about two-wheelers and tractors. How else do you play that theme?
There could be staples. There could be lower ticket discretionary products. So in fact, there is a point of view that even if the rural incomes does revive, even if there is more money in the hands of the rural, the benefit could be more for discretionary rather than staples. But that needs to be analyzed. So I think there are a lot of moving parts in the market at this point of time. And my preference right now is to take cognizance of moving parts, both domestic and global, and question the few strong trends which have been in force for the last 1 year or 2 years, and try and assess whether some of these can actually reverse or stall, at least temporarily.
Hi, Dhiraj. Good to have you on the show. What's new then? What else do you like? I mean, the market is hungry for ideas. In the near term, the headline index could consolidate, one would think. Maybe we go a couple of percentage points up from here. But in terms of other themes, what are you looking at? I recall Zomato, and we've spoken about it in almost every interview. So let's keep that one aside for now. But give us a new idea, that our viewers can work with from here on.
I think the largest focus at this point of time is on banks, because banks have been conspicuous by their underperformance for quite some time, and valuations have come down, numbers are looking okay. So that's one area which is very conspicuous by its underperformance, despite good numbers coming through, right? So another large sector which has been underperforming is IT services, but then you can see the reason for that. IT services revenue profile has been weakening over the last 12 or 18 months. And the hope of a turnaround in IT services, which most of the analysts were pegging at first quarter FY25, looks like it's pushed out. So I would say huge focus on these two sectors are required. IT services primarily because I think US economy just continues to surprise positively. So I just sometimes wonder for how long will the US companies resist from restarting the spending and reinvesting in technology. So there is no sign of inflection yet in IT services, but I think this is one space where we need to watch very closely. The slightest sign of inflection, and the stocks are sitting on some good cuts and good underperformance in the last 1 year or so.
All right, that's the banks. So you're referring to the private sector banks because they have actually underperformed the largest banks. So what do you do with the PSU banks? You know, two schools of thought. One would say that an SBI still has room to grow if they're going to be growing by that 15% odd with ROEs of mid-teens. Then they don't need to come to the market to raise fresh capital, and also they have that stake in Yes Bank. While the other school of thought is saying bulk of the good news is in the price at around this 850 rupees. Your view on PSU banks?
I like SBI. I don't know about. There are a large number of PSU banks. I don't have views on all of them. But I think the couple of leaders still look good from a longer term point of view. From a shorter term point of view, as you rightly said, there could be a little bit of a rotation into private from PSU. That's highly possible. So I think the event of the last few months, not just election events, the events of the last few months, which is a weakening rural economy, signs of confusion out of the US, expectations of rate cuts now being firmly postponed till the end of the year. But the flip side of that is, which obviously means that the US economy is a lot more stable than what people believed it to be. A bit of rebound in China, a bit of an inflection point in China. A lot of these things can cause some mini cycle rotation in our market as well. So, the curve can rotate within the sectors. No conclusive signs of that yet, but I think it will fall into place within the next 2 to 6 weeks.
Right, 2 to 6 weeks. But, Dhiraj, you did speak about the IT services sector looking a little better because at some point the cycle will turn. That's one school of thought. The other one is that the cycle may have, moved structurally towards low-cost products, newer technologies, artificial intelligence, and that may structurally reduce margins for all the IT services companies. So, is that a risk? And that's also a benefit to a lot of the other players. So how do you play that then?
I think you will still require IT services of the kinds that we do. So, this is not the first time questions have been asked about the structural reasons for IT services to exist or go into a structural decline. So remember when there was cloud, similar questions was asked that with the cloud services coming in, do you actually need the traditional IT services? Before that, it was digital, and then now it's coming down to AI. I mean, AI can do a lot of stuff, and most Indian IT companies will adapt to actually use AI and benefit from AI rather than get completely wiped off because of AI, right? So at this point of time, while we may it may sound a lot more intelligent to attribute the decline in IT services business to AI, but the fact remains that if we just actually look at the IT spending of most of the US companies, it's been on the they've been a little bit on a cost saving spree. And US is a very hardcore capitalist economy. Even if the analysts forecast that there will be a slowdown, the companies just scale back. So slowdown has not happened. The economy is doing well, but the fears of slowdown, recession, soft landing, hard landing, it just continues. And the companies have scaled back their budgets a little bit. When they come back, IT services will come back. I mean, yeah, all right. If you're talking about will IT services go back to 25-30% growth curve, I doubt it. But can they improve from here? Of course they can.
All right. Thanks a lot, Dhiraj, for joining in and weighing in with your thoughts on a multitude of sectors. Wish you good luck, and we will obviously keep coming to you for newer ideas as they come as well. But with that, let's talk about another company.